Hi there, I'm Dean Heskin. You're tuned into our podcast, The Secret War on Cash. I'm the president and CEO of Swiss America Trading. We've had this podcast going now for, getting close to, I think, almost 2 years. And I'll bring on my co-host here, Chris Agelastos. Chris, how are you? There he is.
Doing well. I'm your almost always co-host.
We said that last podcast. Almost
right.
always. Yeah.
I hung on to it. I'm getting cards
fantastic.
made.
You should. You absolutely should. All right, well, let's get into it here today.
Yeah.
We in this podcast, as those of you who've tuned in the past know, we talk about just some of the things, more often than not, some of the little wrinkles that are taking place in our financial markets and the economy. And this one's, I think, a decent sized wrinkle, this first article from the Daily Hoodle. 37, that would be billion, Chris, in capital flight hits the stock market as foreign investors pull out of the U.S. Okay, this according to this analyst. Now, here's the thing: as I saw this, because of the dollar, and some of it actually having to do with tariffs, and some of it have to do with BRICS, all these various issues. The confidence factor in the United States in our dollar, our financial markets, et cetera, is dwindling fast. Okay. And here's the thing. I kind of tend to try and keep up on things, as I know you do. And more often than not, during the day, I've got CNBC on, just seeing what's happening in the various markets, et cetera. They do actually a good job of covering like a wide variety, a wide range of topics. Okay. But I will say I don't know if I really ever remember them talking about this. And this has been an issue. The amount of money that's leaving the U.S., albeit people dumping securities, dumping our equity, meaning our government treasuries and securities, that type of thing. Securities meaning stocks. $37 billion. That's a pretty big flight, and this is just a little bit of it. This is like a small crack in the ship, if you will. But you don't hear them talking about this, and the point and the problem of it is that we're losing support in our markets. We're losing support of our currency, of our financial markets, our equities. And that can only happen for so long, Chris, in my opinion, and that's actually mathematically a fact, before at some point it's going to create a huge mess, huge problems for our markets, for our economy. So, why do you think they're not covering this? And do you think it is, a serious problem? As serious as I do?
Yeah, it's definitely an issue. And why they aren't covering it, I mean, I hate to be a conspiratorialist, but I really don't think that they want to beat on the U.S. stock market too much or scare people too much. I mean, they need to make it entertaining so people tune in. All of these news agencies, if you want to call them that, I mean, really, they're in the business of getting ratings. So. But I don't think they want to crash the stock market. All of these people also probably invest in the stock market. So that's, one theory. But what really shocked me about this, because at first I read the headline, I had to count the zeros a couple times to make sure it was billions. And I realized that this is just from May. And I was thinking, well, it kind of makes sense because of all the tariff talks and battles that we were going through, especially in January, February, some of March. But this is, a lot of that's been somewhat resolved or shelved a little bit. I know we're coming up to some new deadlines that'll probably get, pushed out further as they have the last couple of times. But to me, this signals that foreign investors are past the headlines of the tariff issues, and they're just realizing that maybe the U.S. isn't the best long-term bet at the moment. And that's more concerning than just a temporary flux of funds coming into the market. That hints at a long-term problem, which we've been talking about for a while with our debts and deficits in this country.
Sure.
So I think that's a big part of it. Now, they mention in here that retail investors here in the U.S. are buying, have actually been putting in tens of billions during that same period of time in mutual funds, equities, ETFs. But what they don't really mention is a large portion of that is people just automatically contributing through their retirement plans, through their 401ks, 403bs, deferred comp plans, things like that. And those investors are doing what you're supposed to, which is just dollar cost averaging and continually buying no matter what the news says. But I think the challenge is with those regular folks like us putting our money from our paychecks into the market and the foreign money leaving, our U.S. retirees and American workers could suffer the worst from a market implosion. When this market finally does readjust and correct itself, it's mostly going to be all the mom and pop investors and the average people that have been setting aside all their lives, like they were told, to try and retire one day, and that's going to affect a lot of people here in the country. It's going to affect their living situation, whether or not they can retire. And that's what I really am concerned about, because that's going to be all of our neighbors, everybody that we see and interact with every day.
Well, and to your point, the 37 billion, the reason they don't talk about that in the networks is, like you said, they don't want to scare people and et cetera. And it's the foreign investors who are taking a more macro view or perspective of this situation. And they're saying, okay, like you said, this is not probably the best short-term play. We don't know if it'll be a long-term play, meaning keeping it here in the dollar. So they're pulling out. But yet the average American, the people we know, people like us who watch CNBC, and they don't, because CNBC is being protectionary, we'll call it, they're not really getting into what are some issues that potentially could create some problems. People are just continuing on their auto pay, if you will, putting that money into the accounts. And to me, that's not good, because the reality of the situation is the reality of the situation. It should be discussed. It should be talked about. And there are things you can do to combat it. That you can diversify into. They should be talking about, hey, if there's a problem here, maybe you should be looking to get into gold. Maybe you should be having a bigger cash position. They could be doing some very good and intelligent things, other than talking about what Musk is going to do to turn around Tesla, which is fine to talk about that, but there are some bigger macro issues that just are not getting addressed. So, yep. And that's where the secret war on cash is a real thing. And for those of you tuning in, if you haven't already received a free copy of it, contact our office. Call us at 1-800-289-2646 or text us at 1-800-289-2646. We'd love to get you out a copy of it free of charge. You can actually visit us online and do the same thing at www.swissamerica.com. Learn more about what's going on in the overall economy, the global markets, et cetera. So finally, this not to be forgotten here, Chris, we got an article from BRICS. 50 plus nations now use Yuan, Rupee, Ruble, and not the US dollar in trade. And this piggybacks nicely on what we were just talking about. This is just another version or variety of dollar abandonment. Dollar abandonment by way of what they're doing in pulling those billions out of our stock market. And now what these nations are doing by abandoning dollar and trade by opting or utilizing other currencies. All of which not good for the US dollar. Ultimately, probably not good for US markets. So this is another issue, and we've talked about this before, Chris. The networks aren't talking about BRICS to speak of. Tariffs are about as close to BRICS as they've come, and tariffs aren't even close to what BRICS has got going here. So the BRICS train continues to roll. Do you think it's going to be a problem sooner versus later?
Yeah, this is not going away, right? Like you said, the de-dollarization trend, it's only going to continue advancing. Countries have been embracing this. I was thinking about it, they're doing trade in local currencies, which means they don't have to, number one, rely on the dollar or have the expense of converting funds into the dollar. And it's similar in my mind to, if I'm going to make a purchase at a store and I can get a 5% discount by paying in cash or maybe using my debit card, but using a credit card, I'm going to pay 5% more. So it's just a barrier to entry, right? So I can save myself some money, and if it's easier for me at the same time, then even better. And I think that's what a lot of these countries are realizing. They've broken away from the traditional petrodollar situation where they used the dollar, especially for obviously oil purchases, but other international trade. BRICS has expanded. People have gotten a taste. When I say people, nations, of using their own currencies for these trade deals. They highlight India and Russia in this particular article, which I didn't realize that India is now purchasing about 2/3 of their military equipment, their imported military equipment from Russia. That's a huge number, and they've more than doubled their trade with Russia in the last year. And a lot of that probably has to do with some of the sanctions on Russia. Russia's probably being a little more agreeable with nations that are willing to trade with them, since the U.S. And the Yuan has blocked them out a lot. And these countries can now, with BRICS and especially this electronic payment system that they're working on developing, they can conduct business internationally without any of the compliance issues, without having to necessarily take too much heed as to what the U.S. Government wants them to do. So it's I've said it before, but I mean it's not going to slow down. It's going to stay the same or accelerate. And the real scary thing is when it does start to accelerate, it goes very fast. So you can go from hardly hearing about it a little bit to all of a sudden doubling, tripling, quadrupling the amount of trade done without the US dollar, which could have devastating effects here at home.
Right. And certainly, they have much greater flexibility doing it through BRICS and doing it in those domestic currencies, flexibility across the board in terms of pricing, what they can buy. There's not as much governance, if you will, when they're tied to having to convert into dollars for all these transactions and whatnot. So that's why it's going gangbusters. And it's, what once was just a few nations, not even 2 years ago, is, rapidly growing into, 50 plus nations now that are on board with this. And it definitely is something we'll have to give at some point in time here. So, all right. Well, Chris, thank you for that. We'll be talking more to you and with you about this in the future. Thank you for those tuning in. And if you're not subscribed to our podcast, as I always say, please do so we can talk to you more about this and other issues in the future. Have a great rest of your day, and we look forward to seeing you again real soon.
Take care.